Alright, welcome back. My name's Take Note. In this video, I'm going to be doing a stock market update in regards to the US 30 chart. I've just cleared it. We can go ahead and get started on the update. So first and foremost, we had a market sideways trend within this range. Price was bouncing up and down within the range, targeting the highs and lows of the range. We managed to get a breakout underneath the range. Price ended up pulling back, and then we had a failure to hold the range, and then price crashed lower. When we had this crash, we saw price come and target liquidity resting here, as well as we saw price also have a bounce within this fair value gap. As we swept liquidity, we started to see price become a bit more bullish. Initially, we had a market structure shift to the downside here. Then we swept liquidity. We had a further market structure shift here. And then we had price come all the way back down after a sweep of liquidity at this level right here. So after we swept liquidity on this level, we was waiting to see what would happen, whether or not price would continue to the upside, which we've recently got. However, we haven't actually had a market structure shift. The market structure shift will occur once we break and hold above this level right here. Just to be clear, the decline that occurred here occurred following this fair value gap, which had been tested. We saw price break into the fair value gap, retest it, and then we saw price continue lower. And then the rise we had over the last couple of days indicates to us that we could potentially see price targeting this level to confirm the market structure shift, and we'd have further bullish momentum on the upside to continue back to the lows of the range that we traded at. So what am I looking for this week? Well, if I'm going to be completely honest, the markets are in very, very wary areas. And when I say wary, I mean you can't go all in to the upside at this current moment in time because we haven't had our market structure shift, and we can't begin to look for short positions until we get price to bounce off this level and deny the market structure shift. So going into next week, I'm going to be very patient. I don't have any confirmations that price wants to go higher apart from this one signal that I have, which is this fair value gap being held last week. And this gap being held was a good indication that there's a potential chance we could be going higher. However, I don't want to take this trade for two reasons. The first reason is if we take a look at where we're positioned in regards to the range of the decline that occurred, we're currently sitting in a premium part of the range. What this means is I do not want to be looking for buy trades in a downward move at a premium part of the level. I would prefer to see price pull back below this 50% level somewhere in this area and present some structure for price to go higher. That is the optimal trade. What I mean by that is, unless you positioned in this fair value gap aggressively, this would not be a trading opportunity to look for buy trade inside the premium of this zone. It is actually a very dangerous position, and I doubt most institutional investors look to position aggressively when price came back into this zone. So for that reason, I'm going to be monitoring two areas. The first area I'm going to monitor is this area here. If price comes up to this fair value gap and breaks and holds above this level, I'll be happy to begin looking for long trades within this fair value gap. But I would need to see an inversion of this fair value gap first. The second place I'll be looking at to monitor in next week, during next week's trading sessions, is this level down here. That is the low of the downtrend range. It's also the only area that we've got as a fair value gap, as well as that we've still got liquidity resting here. And I know this is liquidity because price was unable to sweep this low here, the low of the range. We was unable to sweep, and I can see that at this point right here, price was not able to sweep the lows, followed by a pullback or decline that swept liquidity. We failed to target these lows down here. We only stopped here. So this tells me that this is further liquidity building up. This looks like this. This is where our levels of liquidity are. So for this reason, I'm going to be extremely patient next week, as we've got liquidity rested in these two zones. This is an uptrending sort of channel. We will need to sweep all the levels of liquidity resting at this level, and all the other liquidity that's set up around this area. So I'm expecting price to breach the lows next week. If not next week, in the next few weeks. However, at this current moment in time, I see us just trading within this range, potentially building up more liquidity at this level up here before we do sweep to the highs, and then we come back down and sweep the lows, and then we continue higher. The main reason I'm not confident is because this area has set up liquidity, and this is not a successful bull market rally in the sense that for us to go higher, we need to go higher aggressively. It needs to be an aggressive push. And the reason I say that this is not an aggressive push, because we got a red candle close on Friday, as well as having failure to breach this level here. And we know that liquidity rests at highs, so it doesn't seem likely that we're going to move up aggressively into next week. I could be wrong, and if I am wrong, I'll hold my hands up and say I made a mistake. And obviously, the worst case scenario of me being wrong would be for me to enter a trade and lose money. So patience is the best way to plan for the markets next week. Wait for a more clearer setup. As I said already, I'd love to see price come down and sweep these lows before we go higher back into the range. But this just isn't the type of price action and momentum that I want to be looking at while I'm trading these markets. So that's the issue with the chart at the moment. We haven't got the necessary liquidity. And I can tell this also because when we had this liquidity level set up and sweep, we didn't rally higher aggressively. We didn't get what we call displacement, which is multiple green candles. Usually, when you have a sweep of liquidity, you should have displacement following the sweep, indicating that prices taken out liquidity and institutions are beginning to buy aggressively in targets of higher prices. So this isn't the best chart at the moment. And when the chart looks like this, it's best to be just very cautious. As I say all the time, when I look at the charts and I plan my trades, I know exactly what I'm expecting to see. And when we deviate from that by seeing this sort of day and this sort of day, I begin to be very, very cautious. So just an update onto why I'm not completely convinced that we're going to be in an upward move at the moment. I think price would be better sweeping liquidity at the highs and then coming down to sweep liquidity at these lows here. And once we sweep the liquidity, we should have the momentum to go higher. And as you can see, it will be a wonderful pattern for price to set up this week. That being said, I'm going to leave it there. If you would like access to my free US 30 trading masterclass, learning about how I trade the markets in a very in-depth way, feel free to join my school. It's free entry, costs nothing to join, and you get access to this 1 hour video as well as how to get started in trading the markets. I appreciate you being here. I'll see you in the next video.